It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Monday evening, December 7th, 2015. Happy Pearl Harbor Day, by the way. Yes, kids, if you're following along at home, there is a holiday today. Check your history books if they still have those in school these days. Back for our second full week. Don't forget, today was Reaction Monday. If you were wondering where all the commotion was coming from, if you don't recall, right, OPEC was on Friday, non-farm payrolls on Friday. This is one of two big Mondays that we see. Can you guess what the other is? I'll give you a clue later on in this video. We got a jam-packed newsletter in store for you guys. Remember, this is the good stuff here. Going into those last few weeks of the year right now, all the big money managers are out there trying to hedge their bets going into 2016, and they're going to use the futures markets to do it. Tonight's newsletter, again, excellent Reaction Monday. Crude oil is bearish this evening, but after three very impressive pushes lower in today's session, we know most professionals are flat going into tomorrow's session. So we're going to be waiting for a bullish correction, and I'll bet you can guess what direction we're looking for on crude. I was tempted to tell you to go back and watch a year ago's newsletter video because it was pretty much the same exact scenario. That's all right, though. We'll give you a plan for the crude. How about the S&P? The E-mini appears to be bearish this evening after today's push down off last Friday's non-farm payroll highs. Wasn't that some fireworks last Friday? Wow. But one little clue, actually it's quite a big clue on the S&P, tells us we just might be able to get a good buying opportunity back up to the highs for a pending range tomorrow. I got a pretty interesting chart to look at and a different way of looking at the S&P for you guys tomorrow. How about the gold? The yellow metal is bearish and rotating inside a trend channel this evening. Our focus is quite clear on gold. We're selling, but we got to stay patient for the best opportunities to come after the buyers try to run this thing higher. We get some nice targets waiting for you down at the lows on gold, though, so stay tuned for that. How about the euro? The 6E range bound. We get a bearish bias this evening on the range. Our goal is quite simple. Sell the highs of the range down to the lows and fade all breakouts that fail. We've got an absolute target of 0906 overhead for all you euro traders. You might want to pack a lunch for this video tonight. It's chocked full of information from start to finish, whether you're trading crude, S&P, gold, or the euro. Before we jump into today's charts, though, I want to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel, that's wonderful. There's a link right in the description of this video. Head over to Sideways Markets. A couple of reasons why. First of all, if you're not a member of School of Trade, I would love to invite you to come grab a free pass, come out and test drive our live trade room as a member for a day or a few days, right, as long as you want. Grab your free pass, upper left-hand corner. In the lower left-hand corner, there's a spot here to register for your nightly newsletter mailing list. Now you never have to worry about missing another newsletter ever again. All I need is your name, a real email, and then when you submit your request, make sure you check your inbox. I'm going to send you a verification email to make sure we get the right email address so I don't have to worry about sending you the wrong email address every evening. Right below the video, you'll see a spot to download all the charts you'll see me using in tonight's video. Right? How nice is that? And then over on the right-hand side, you can join our trial membership where you'll get an actual chance to learn about all of our strategies, see what it feels like to be a member there. And of course, you can learn more about being a member, read member reviews, and we've always got someone standing by 24/7 to give you guys a hand if you need any help along the way. Remember, no question too big or too small. We've always got a qualified individual here to answer all your questions when you're ready. Hope you guys had a great weekend. Back to work here now. Let's start out here with the crude oil. Impressive, I must admit. 3 strong legs down. Well, I'll tell you right now, I'll bet the Saudis are a little bit upset with the Iranians right now, right? I'm sure there's a little bit of turmoil brewing behind the scenes of OPEC. Every time they talk about manipulating production, this is what happens. It's been happening for decades now. It's almost at the point now where every time OPEC opens its mouth, the world reacts and says, hey, yeah, keep flapping your gums over there. Keep trying to we're going to keep selling the lows every time you talk. And that's apparently what happened again. It's very difficult to feel bad, right? It's very difficult to do anything but go, more. Let's see the 20s. Let's see right? It's very difficult not to love every minute of this right now. And again, I almost just cut to this time last year because we were pretty much in the exact same scenario. We were a little bit higher on the chart, but what's my plan? Sell it. Sell it. Just don't sell the low. Sell it as soon as it comes back up. Sell it. Just don't sell the low. Right? That's pretty much the plan here for crude. So here's what we see right now. Definitely bearish, but we've got 3 impressive pushes lower. Remember, the first push lower is the market makers, right? These are the folks at liquidity to the market. First push lower, that's the market makers. Second push lower, that's going to be your trend followers, right? Guys and gals like you and I. The third push lower, these are the late adopters, right? The last people to get in line to buy an iPhone. The person who showed up at 10 a.m. on Black Friday. They're late. Right? So after 3 pushes down, all the professionals who got this party going, combined with all the trend followers, they're ready to take their profit now. They made a great profit. We had a great session. Can you guess what direction we're trading in? Looking to sell here right now on crude, but 3 pushes lower. I can't touch this right now to the short side. Okay? The short-term trading range has a clear bearish bias this evening. So we're going to look for a break at the highs to sell it back down. And, ultimately, all we have to do right now is just get this price up off these lows, right? I close my eyes and I see someone performing CPR right now to this price. Come on, get up off this low. Get up off that low so we can wait for the buyers to swing at it again and sell right into their stops. I don't care how high it goes. I'm looking for buyers to try twice and sell it back down. I think the most important clue we're getting right now, outside of that 3 legs down, is this kind of pending trading range. So that pending trading range gives me 39.01, it gives me 39.73, it also gives me 36.85. Right? The white lines you see on the chart, those are going to be the areas of resistance overhead, and then of course a target below. So think of the range and think of rotation. Price goes up, fails to break and go higher, we sell it back down. Okay, that's scenario 1. Price goes up, buyers can't hold the pullback, there's selling opportunity number 1. Selling opportunity number 2 will be it goes a little bit further, right? A little bit further, again, buyers try twice, selling back down. There's only one scenario where I say you can be a buyer for tomorrow. I'll give you a clue. We saw it on the S&P on Friday. Remember what I said on the S&P on Friday? Remember the S&P had made that big push down? Remember on Friday, again, all the way back up? What did it do? It went up and it held the pullback. That's the key. Don't you dare buy this thing right now unless what? Unless it holds that pullback. And even then, I do think you're in. I don't think you're gonna get too much out of it, right? So if it holds the next pullback, you've got one shot. But boy, as it stands right now, I can't confidently say you're going to get much more than that, right? At this point now, even the buyers in the market, I highly doubt this time around, the same permabulls who said, JJ, this is just accumulation, man. This is just a bargain price. It's going back to 100. I don't think they're saying that again this year. Something tells me, right? Unless we're talking about traders on their cell phones who don't have very much historical data. But all the people, all the permabulls who kept rattling my cage last year when I kept telling them to sell, 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 what are you saying now? It's very difficult for me to use that same excuse. This is accumulation? I don't think so. This is a good buying opportunity? So is a 1987 Ford Pinto, right? I don't think so. This is very difficult to justify being a long-term buyer. So right now, if you're a bear with me on this one, stay patient. The bears really got to stay patient, get it up off that low. And again, I've got plenty of resistance areas I'm looking for, but with such a strong move down, I'm not just selling resistance, I'm waiting for a test of resistance and then buyer failure to get the juice into it, okay, because of those 3 legs down. If you're a buyer and you're shaking your head about to change videos on YouTube right now, okay, I understand. You got to be patient here and hold. If they hold that pullback, that's going to be your green light. And then you're looking for sellers who don't see that pullback being held, right? Because what's going to happen is this. Once I see them hold that pullback, then I have to be patient. right? I got to take my foot off the gas pedal, pun intended, and I've got to let these buyers get this out of their system, right? They'll make a measured correction, and then I'll look for the next one to fail, right? And we'll go from there. So buyers, you got to be patient, wait for a pullback. Sellers, your job's really the hardest one right now because you got to let it go up. Again, the earliest area you're looking to sell is going to be the high of this range, 38.29. Think about the euro. Remember what happened on the euro on Friday? The euro made 3 moves over 3 days. What happened at the end of the week on the euro? It went sideways, right? So that's probably what's going to happen tomorrow. 1, 2, 3 legs down. Unless the buyers can resuscitate this market, it's probably going to sit and range out. Plan if it does that, sell the highs, sell the highs, sell the highs. Again, if we hold that pullback, then the buyers go, yes, nice big high price, next pullback. If it fails, I can't predict the future. If it fails, that's the one you want to be selling. Buyers, don't get too greedy on this. This is not a bargain hunting opportunity here. We're going back to 100. Okay, this is a profit-taking, 3 legs down, measured correction. That's all you can really rely on if you're a bull right now, in my opinion. Right? In my opinion. Let's keep going. How about the S&P? This is going to be the chart of the day today, I think. This is the one that really, here's what I think's happened in the S&P. So basically, we talked about this last week, right? We saw the S&P. Here's a good example. 1, 2, 3 legs down into a trading range, very similar to what Crude did. Now, I don't think they're going to get the same reaction on Crude as we got on the S&P. This is what happens when the buyers hold that pullback. Right? They send it up, they hold the pullback, and it's just fire. Now, of course, this is also on the back of non-farm payrolls, right? So this had a lot to do with it, but that's what you're looking for. Again, if you want a good example of what to wait for on Crude, it's that right there. They've got to hold that pullback. Then you can start looking for seller failure and then buying pullbacks on the way up. Okay? Now, here's the scenario on the S&P. We can assume this V bottom, look closely, and it runs everyone out of that market. Every seller who had their stops right at those highs got taken out to the tick. So when you're trading the S&P, this is one of the most challenging parts of trading the S&P. You usually have to use a stop loss that's larger than your target. It's just the way the S&P works. The S&P, like I told you guys before many times, this is the last market I would start my career on. You're competing against the all-star team. Okay, just a bunch of LeBron Jameses you're competing against right now. Okay, I love trading crude oil because when you trade crude oil, you're literally competing against a junior varsity team, right? Bunch of rookies, bunch of gamblers, right? Those degenerate crude traders, right? Okay, so no offense to the degenerates out there. So this is the S&P. So we have to assume that a lot of these sellers who got short right about here or right about here, they're not going to have their stops all take you out right here. Their stops are hanging out above a major high. So now, as this price goes higher, they're in the red, right? Those sellers are taking a big loss. So here's what a lot of crafty professional traders will do on the S&P. They'll place a limit order to sell 1 tick below their stop loss. Now, why would they do that? Well, because they've experienced this before, where it goes up, it makes a double top, and comes back down. So if I put a stop order, right, stop loss, 1 tick above, 2 ticks above the high, and I put a limit to sell, what does that do? If I get stopped out, it allows me to make my money back. If I don't get stopped out, I get into a trade short at a fantastic price. So that's the assumption I'm making right now. I'm making the assumption that there are a lot of sellers who sold into this move. They got stopped out by those crafty buyers. And guess what's happening now? They're underwater on their negative position. This move down, can you guess what this move down did? It went 50% off that high. In my opinion, if I was in the market with a huge stop like that, right, which, again, we called this move higher a mile away. There was no way I was going anywhere near the sell button on this. But, hey, I'm not the only trader in the world. I'm sure there were a lot of traders here who didn't take their lump. They took their lump all the way up at the high, right? That's how I began my trading career. Just keep pushing the stop bag. You can't keep going higher forever, can it? Oh, you'd be surprised. You'd be surprised. It can go a lot higher than you think it can. So it runs up, it fills their sell limit, and it triggers their stop. So they lose their 50, right? They lose their 50 on the short off the low, right? And they make the 50 back. So what's happened now? Now they're out of break even. The sellers go, whew, dodged a big bullet there. And look what happens. I'm watching this low right here and thinking, we run out the buyers who bought on the way down. The sellers are out of the market now. The sellers tried once more, twice more, and gone. What this feels like right now is that all the long-term sellers got a gift in that price going exactly 50% off that high. That allowed them to ultimately get out at break even. They got out alive. Then they tried to get short 2 more times. Remember, human beings, we always try things twice. I tried to learn Spanish twice, then threw the darn CDs in the trash, right? We try everything twice as human beings. And then if you can't beat them, join them. So that's where we find ourselves right now. They cleared out the sellers. They cleared out the buyers. Now I don't think there's anything standing in their way to rotate this price right back up. Now, this is a lot of assumptions we're seeing right now, right? I'm making quite a few assumptions with this, right? Don't forget, as professionals, we anticipate, but we always wait for proof. So where's the proof going to be? Holding the pullback. You're exactly right. I see this as being a pending. All we have right now is a triple bottom at the low, but that's good enough to make the low of the range. The high of the range will be up top around this 2095, 2096 area. I don't know where the high of that range is going to be yet. But as it stands right now, my gut tells me here, we hold this pullback, we're going back to those highs. Just like we ended up on Friday. Okay? If we don't hold the pullback, we'll try to make a run back at that low. If we get back to that low, now this market has a complete clean slate. Because now we go into this in the eyes of a bearish trading range, and we're back to that low. So if we end up getting back to 65.1, okay, all bets are off, and we're going to most likely going to make a run at this 56, 50 half. I personally still think these bulls have it in them. I still think they're in control, but I need to wait for proof. What I'm expecting is I'm expecting the bulls to hold this pullback. And if they do hold the pullback, I have no reason to think we're not going back to that range high. If they can't hold that pullback, though, and they get to 65 half, the low of that range, then this becomes a bearish range, and all this is a fake break of the high, right, and back down again. Okay, we'll make a run now for that 50 half. Okay? We're going to have to see what this market looks like tomorrow morning in real time. So come out and join us. You know the plan, though. If it holds the pullback, plan on this price going back to range highs. If it doesn't hold the pullback, then we wait for a little bit more information. Does it get back to range low? If it does, now I've lost all confidence from these buyers. And at that point, I would expect the buyers to try and fail, and they're going to try to make a run at 50 half, range expansion, and ultimately 35.75, which is basically this range copied and pasted lower. All right, guys, this is a definite interesting scenario right now. There's a lot of variables happening in the S&P right now. Careful. Careful, you don't know what your plan is for tomorrow. Follow the plan. Now, on to some easier markets. How about some gold? How about some gold? I thought they were bullish for a second there. No. Reality check. Reality check. We are in a deflationary period. Currencies are rising in value right now, and of course the need for the yellow metal is of course deteriorating right now as well. Gold is bearish and rotating inside a trend channel this evening, so our focus is selling. But we need to stay patient for the best opportunities to come after buyer failures on the way to the measured move target below. Look at the size of that wick. I mean, geez Louise. Right? I'll keep that joke to myself right now. Yes, wrong YouTube channel. Wrong. Anyways, let's keep going. A, B, C, D. Yeah, come see me in my office. We'll talk about that. Come see me in the trade room. We're not under the scrutiny of the whole world. AB equals CD. That's where we're going lower. I like to have some fun, but there needs to be a line somewhere. If you know me well in the trade room, you know I'm always good for a laugh. AB equals CD. That's your measured target, right? That's our goal. Oftentimes close is close enough, but that's a good point away. It's a good dollar away. So I'm not going to say that's close enough. If it would have closed down, I would have thought differently. But you'll notice that wick just whoop right back up. So I'm sure there are a lot of candlestick traders out there these days. I'm a price action trader, not a candlestick trader. But I'm sure there are some traders out there that will buy this thing. And I'm sure their stops will be hanging out there. So ultimately, the same plan for crude can be applied to the gold. Wait for it to go up. If they can't hold the pullback, sell it back down. If you're a buyer right now, wait for it to go up. It's got to get above that moving average and hold that pullback. That's your only shot at being a buyer right now on gold. All right, and it takes a lot for me to say to be a buyer on gold, just like it takes a lot to say to be a buyer on crude. Different reasons, but again, this market really struggling to get up off these lows right now, just for obvious fundamental reasons, and the technicals are confirming we're definitely looking for that target at 63.9. So scenario one. Right, we keep going lower. If we keep grinding lower, well, woe is me. I can't do much to find the most reliable trades. If you want to be a bear, the best thing to do is wait for price to go up. They can't hold the pullback, and we sell right into their stops. If you want to be a buyer, goes up, holds the pullback, and then you know where the seller's stops are. You can start buying right into their stops. Again, though, I don't expect to get much. Just like I said on crude. You're looking for a counter trend correction here. You're not expecting a trend reversal. Okay, but the difference there, a correction comes off profit taking. A reversal maybe starts as profit taking, but there's going to be a lot more interest in that pullback. It will hold that pullback. If it's going to be a reversal, it'll hold. Right, and then you'll find a new major channel, and we'll use that channel rotation. Again, come out and see me tomorrow morning. We'll talk about this market in real time. Most important thing right now, though, is if you're a bear, stay patient for buyers to fail after it comes off these lows. If you're a bull, don't expect much, but look for that measured correction only after it holds the pullback. Here's another interesting chart on the euro. The euro's a fun one tonight. Euro is range bound with a bearish bias this evening. Our goal is to sell the highs of the range down to the range lows and fade all the breakouts that fail to reach the range rotation target up at 10,906. Now we can see the bearish move coming into this trading range, right? That red arrow in the chart. And we can see price is at the highs of the range. So we'll definitely be looking for selling opportunities as it rotates down to the lows of the range. Now here's a scenario. If price shoots higher, we're going to patiently wait for the buyers to try twice and fail if they reach 0906 overhead. If it goes lower, we're just simply looking for rotation down to that channel low. Let's play that game called what if price goes higher, what if price goes lower. We can definitely see that bearish move into triple bottoms, double tops. That's our trading range. Now with that bearish move into it, we're looking to sell the highs, take profit the lows, right? We're looking to sell the highs, take profit the lows. We're also trying to fade all the breakouts, right? So if price goes up, again, let's play that game. What if price goes higher? If price goes higher, this is going to be the hardest scenario. My objective, if price goes higher, is it needs to get to 0906. We'll wait for them to try once, try twice, and if they can't get to 0906, then we look for buyer failure down to 85.56, 08.06, possibly all the way down to 07.56, right? The pendulum will swing. So imagine the pendulum, price goes up, can't get the job done, it comes crashing all the way back down, right? Okay. If price pushes higher and it does reach 0906, now we look for range rotation back and forth inside of that range. So really the milestone is the 0906. I'm not expecting much more than an attempt to go higher. Let them try a few times, but again, if they're not getting to that 0906, pendulum's going to swing. It's going to go back to the low of the range, but again, that pendulum's not going to stop there. It's going to try to get us to 0756 on the opposite direction down. Okay, the only scenario where we can't really aggressively sell is if it gets to 0906. If it gets there, then we go into a new balance area, and it's buy low, sell high, buy low, sell high. It's pretty much a balanced market at that point. Okay, we'll look for range rotation. What if it goes lower? Well, if it goes lower here, we're looking for buyer failure, buyer failure, buyer failure on the way down. Remember, when you're looking at a range-bound market, failure patterns are the most reliable. We talk about that in our trading course here at School of Trade. Range-bound markets, continuation trades are great, but this is not a trending market. So this is this is a range-bound market. So you'll notice here, the buyers try buying that pullback, it fails. That's your ideal spot there to be a seller at those highs. Right, selling into the buyer's stop losses on the way down to that rotation target. Okay, now if we go lower, if we do reach that 0806, then we expect rotation back higher. If they fail to get to 0856, try once, try twice, can't get to 0856, then again the pendulum swings and we're running after 0756. Okay, remember, if the buyers can't if we go lower and we get to 0806, then they've got to get to that opposite side of that range high if they're going to keep the balance. If they can't get there, try once, try twice, the sellers will see that as weakness and they will attack. Targets at the range low, but ultimately they should go to 0756. Now, here's a scenario to remember. If we push lower but we can't get to 0806, right? We try once, we try twice, and as much as we try, we can't get to 0806. You can then expect this price is going to want to shoot higher. But then, of course, from there, they have to get to 0906. If they can't get there, right, then we're back to the same scenario again where it comes back down. Remember, they've got to complete the rotation, either down or all the way up. That's the key to trading ranges. They've got to give the tag you're it, pass the baton, or else the pendulum will swing. Don't forget, we teach all this stuff and we trade all this stuff live in real time every day with all of our students here at School of Trade. Now you get a plan on the euro, right? Range rotation. You get a couple scenarios on that. Don't be afraid to watch the video over again if you need to go back over it again. On the gold, again, bearish, buyer failures after price goes up. If you're a bull, make sure they hold that pullback if you're going to be a buyer. Okay, on the S&P, we talked about this, right? If they hold that pullback, we're going to the range high. If they don't, we're watching 65.51, right? If they can't get it, we'll still try to go higher. But again, if they get to 65.5 here overnight, early tomorrow morning, all of a sudden this market feels very, very heavy, and they're probably going to try to make a run for that 50.5. 35.71. We need more information on that tomorrow. And then again on crude, right? Somebody find a pulse. Somebody get some life into this thing. We want to get it up off these lows. Again, if you're a buyer right now, I'd get some new glasses. But again, if you're a buyer right now, make sure it holds the pullback. Don't expect much to the buy side, right? Don't get too greedy. Okay, all the sellers are going to be waiting for you buyers to fail to sell right into your stop losses. 37.57, 36.85. Those are some good targets, and we'll be trading all this stuff live in real time. Don't forget, wrapping things up, grab your charts, join the newsletter, Grab your free pass. Tomorrow morning, we've got some JOLTS report tomorrow morning. My gal Yellen's favorite news report, the job openings and layoffs transfers survey. Ooh, right? Tomorrow morning, 10 a.m. Eastern time. Be ready for that. And, of course, I can't forget, check out schooloftrade.com. I take a lot of pride in the fact that you're going to learn more with me on my free trial than anywhere else on the interwebs. Okay, grab your free trial right in the homepage. And don't forget, you can learn more about our 3 levels of membership, beginner, intermediate, and advanced. We give everybody a home here at School of Trade, whether you're a brand new trader, learning the ropes, need a good firm foundation to kickstart your career, or you're a grizzled veteran trader that just simply can't get the combination of things to work for consistent profit. Don't forget, I've always got someone standing by to answer all your questions 24/7, 365. My name is Joseph. We got a great week of opportunities ahead of us, guys. Now, don't forget, share this information with a friend. Send me some feedback to JJ at School of Trade. Give me a thumbs up on the YouTube video, will ya? And come back and see me tomorrow morning. We open up at 8 a.m. Eastern time with our students at School of Trade. Same time, same place for the newsletter around 8 p.m. Eastern time. My name is Joseph. Be well out there. Be nice to each other, will ya? It's the holiday season, for crying out loud, right? I'll see you next time, guys. Adios, amigos. Bye-bye for now.